Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. Gold market recently, as you can see, doesn't generate a lot of trading setups actually, because really contradictory factors make an impact on the gold price. So just last week, when the Fed Reserve had raised the rate and was the pressure on the gold market, and gold market has dropped to our 1250 area. On the current week, as you can see, we see the bounce. From a technical point of view, this is normal since there's really strong support, as we have discussed already, including the monthly pivot points, gold line, and confidence support in daily. Fundamentally, it could be explained by the drop in the crude oil price and United States Treasury yields that shows the decreasing on inflation pressure, and mixed statistics that we saw also in the previous couple of weeks makes traders think that Fed could not raise rate anymore in 2017. And right now, as you know, based on the Fed Fund futures rate, approximately the 49% probability that Fed will raise rate in December. So it's really not really support probability. That mostly corresponds to our view, because many times we already talk on the subject, and our view is that Fed will not raise rate anymore in 2017. And we think that understanding of that, so close to the end of the year, the investors will start to understand this better and better, and accompanied with geopolitical tensions, geopolitical supporting factors to the gold market. This should make the positive impact in the gold market in 2017. So maybe this impact will not be right straight and will be significant volatility on the gold market, but at the same time we think that it will be a difficult journey, but still gold market should appreciate. In 2018 this will be quite another story, because the more aggressive policy from the Fed should happen next year. So as you can see on the daily chart, would not have much to trade actually. So the only thing that I see is that maybe some kind of the Brent body lookalike pattern. So we have the 8 candles to the downside, this minimum required candles for Jordan Apple Brent body, but we have this not quite comfortable spike up on the Fed meeting. So this spike is not really a very good sign, because it makes the significant retracement in the thrust down. That's why we probably could call it as the lookalike pattern, not purely Brent body, but lookalike. Anyway, if even we will not use a name of the Brent body, this should be some kind of it could be some kind of the momentum trade, because collapse here was really not bad, and bearish impulse that was here is still valid, and on this minor retracement, it is still possible that this impulse will press on the prices that will force it to make some deep retracement. So it'll be a very short-term trade, actually, mostly technical. It has no relation to the fundamental or economical balance on the gold market. It's just technical issue. That's the only that we see right now on the gold market that could be traded. On the intraday charts, guys, another reason why we think that this retracement is possible is based on these actions. So take a look, that's definitely we do not have something of that sort here. It's very gradual with a deep retracement action that mostly indicates the retracement. That's why here we think we have the two thoughts on this. First one is this ABCD pattern really could continue as soon as this retracement will be over. Next 1222 area, this is also possible right now. Is not if nothing will change around the fundamental and political background in the world. It's really not bad chance that market really could continue move down. Second, as I said, this gradual action, choppy action suggests that this impulse down should be enough to trigger deep retracement here. Also, guys, if you will measure the length of this retracement, some kind of the harmonic, and trying to apply the harmonic tool and clone it and drag it here, you will see what level market should reach. It's 1261 conference resistance. It's also natural support resistance because takeovers was previously was resistance, support again, breakout. Now it will become again a resistance. So market right now mostly confirms our suggestion that we have made in the previous week, that probably it should move slightly higher and reach this area. And indeed, on Friday, as you can see, market has broken this 1255 first fib level and coming to the next one. That will be the major area to watch for bearish signals, because we think that this trade that we have on the daily that we have just discussed probably should start somewhere from this conference resistance. For that purpose, we could take a look at the hourly chart and use our ABCD pattern that we have here in progress. It has the target 1260.62. Also, market could form some bearish reversal pattern here. Maybe this will be the butterfly, maybe hand shoulders or something of that sort. So if market will form any pattern that will finalize this ABCD pattern, this will be an advantage, because you could use this pattern for understanding where to place stop, where to take the position. So it could point you the precise level where upward action will be over. So that's the scenario that we will be watching for on Monday, because I think that it could start even on Monday, and maybe if it will be even completed on Monday. At least within the 1-2 sessions, probably it should reach the target. So minimal target will be the 1248, 1250 fib support, because this is the 618 support of the whole upward action. This is the classical target of the Napoli brand body trade. But here, guys, as we have talked on this possible downward continuation, who knows? Maybe this brand body that we intend to trade could become the starting point for a downward continuation right to the 1222. That's why here you could make the decision if this trade in overall will be successful and the market will appear at 1248. You could, for example, take the half of the position, move your stop to the break even, or just tight your stop, and left the rest half for possible downward continuation to 1222. That's very common action that traders usually apply in such circumstances. So that being said, here's the short-term stuff that we'll be watching for in the gold market. And I hope that this will be successful. At least currently, guys, actually, I do not see something else that could be really valuable that we could trade in the bull market. The only this setup that we have just discussed.